All right. Hello and welcome to the Movoto Mic, the official podcast of Movoto.com, the largest privately owned real estate search platform in the US. I'm your host, Sophie Brandeis, and I'm thrilled to be kicking off season 2 today with my co-host, Jenna Housing.
Hi, Sophie. Well, this season, we're going to be shaking things up a little bit. Each episode, we will bring you the top headlines in the housing market, real estate, and mortgage industries, and we'll have experts weigh in with their insights.
To help us start this season off strong, I'm excited to welcome on James Rodriguez, senior real estate reporter at Business Insider, writing all about the national housing market. James, welcome to the Movoto Mic.
Thank you so much for having me.
No problem. All right. So we're going to start off strong by talking about Freddie Mac. They just published their housing outlook for late October 2024. And the spotlight of this outlook was first-time homebuyers. I pulled a quote from the outlook. First-time homebuyers are increasingly driving demand in the housing market. However, they face headwinds in terms of affordability, supply, and overall economic conditions. Wondering your thoughts.
Yeah, it's interesting. I did a story back in January of 2023 that was basically talking about the situation that first-time homebuyers found themselves in. And I think the headline was something like, first-time homebuyers are royally screwed, which was a quote from somebody that I spoke to who just felt like first-time homebuyers found themselves in this impossible position where they had seen prices rise so much, and then mortgage rates had risen from the lows in 2021. And I think what we're seeing now is a little bit of the pendulum swinging in the other direction, where first-time homebuyers maybe have a little bit better of a chance with more inventory on the market than there was a year ago. I think in September it was something like 30% more active listings on the market than a year ago. And that's a meaningful difference. We've also seen, rates come down a little bit from where they were a year ago as well. So I think the other factor is so many people made their moves early in the pandemic, and now they're locked in with these low mortgage rates that they got, and they're not in a hurry to make a move, or maybe they refinance and they're not in a hurry to make a move. And so they may be facing a little bit less competition in that respect. So it's interesting. I'm always interested in the position that first-time homebuyers find themselves in, because earlier in the pandemic, it looked like first-time homebuyers were getting a lot older. They're having to get more help from friends and family to make the down payments and things like that. So definitely always closely watching where first-time homebuyers find themselves.
Right. I found it interesting in this article. They talk about how first-time homebuyers are crucial to seeing market growth in the coming years. What are your thoughts on the importance of Gen Z buying homes in the next 5 to 10 years?
Yeah, especially when we think about the generational sizes, right? Millennials were this huge generation. They're the largest living generation today, and they were hitting their prime home buying years right as all of this pandemic craziness was happening. And that was coinciding with the shortage of home building after the Great Recession. So you put all those factors together, and we end up with this crazy housing market that we had, especially earlier in the pandemic. And so I think you're going to see, builders and pretty much anyone in the housing industry really looking toward younger millennials, Gen Z, to kind of fill in demand moving forward as we kind of move through this huge, millennial generation as they kind of age, from starter homes to the move up homes and things like that. So definitely an interesting generation to watch.
James, I wanted to read you a headline going in a little bit of a different direction. It's from NPR, and it says that mortgage rates were supposed to come down. Instead, they're rising. And the quote I want to focus on specifically says, "I think the new normal is maybe a 6% mortgage rate. The days of 3% and 4% mortgage rates are over, at least in my lifetime." That was shared by Dr. Lawrence Yun, who's the chief economist at the National Association of Realtors. What's your reaction to this?
I think the first thing that comes to mind is just how hard it is to predict where mortgage rates are going, right? And you see all these predictions and all these forecasts, but at the end of the day, it really is hard to look into that crystal ball and see where mortgage rates are going. And I think that take is what I've been hearing from a lot of other economists that I've been speaking to right now, that those days of 3% and 4% mortgage rates, or even, the twos that we saw kind of at the kind of peak of mortgage rates falling during the pandemic, those days I think are past us. There's nothing that would indicate that those days are returning. And I think it's about, homeowners, potential sellers and buyers kind of they have to recalibrate what they expect in terms of their monthly payments, and that is a pretty significant difference when you think about even 4% versus 6%. That can be hundreds of dollars a month. And I think it takes time for buyers to kind of get used to where mortgage rates are. I think I was talking to one economist who was talking about kind of a 6-year lag. If you see mortgage rates move significantly one way or another, it kind of takes a little bit of time for people to understand what that means for their budgets, to kind of understand, okay, this is the trajectory that things are headed. Maybe I can make a decision. And people also buy and sell for all kinds of reasons that have nothing to do with mortgage rates, right? And I think kind of my last thought on that is just the Federal Reserve. When you see talk about, okay, this Fed rate cut is coming, that's a much shorter term rate than what the mortgage rates are based off of. When you think of the 10-year Treasury yield, that is separate from the levers that the Federal Reserve is pulling. And so there's not exactly a one-to-one correlation when you see Fed cutting rates. It's not going to necessarily be the same outcome for mortgage rates. And I think that's important for people to keep in mind as well.
Some of the market dynamics show that inventory has increased, which provides more opportunities for buyers. What are your thoughts on that? What will that look like in the future?
As I mentioned earlier too, you do have this combination of lower mortgage rates than a year ago. They have ticked up recently, but still more than a full percentage point lower than a year ago. You also have inventory that's up 30%. I mean, that is a pretty significant difference. And you have to keep in mind at the same time, it's still lower than pre-pandemic levels. So we still have a ways to get back to what we might consider a quote unquote normal housing market. But you think about lower mortgage rates, more inventory, more choices for buyers on the market. I do think that is a powerful combination that could kind of start to get the wheels of the housing market turning more again, especially when we look into the spring, when people can kind of get their heads around where mortgage rates are at. They can look out and say, okay, the busy buying and selling season is here, and I do see more options out there. I think when I talk to economists, they talk about this kind of slow recovery. So it's not like we're going to get to the frenzy of 2022 or 2021. Or even 2019 or 18 next year. But we are, I think at least right now, we could expect kind of a slow trend toward seeing more people listing their homes, more people making these big life moves. And it is kind of this game of musical chairs almost, where you look out and you're kind of waiting for other people to make their big life decisions so you can make your big life decisions when it comes to buying and selling a home. So that takes some time.
That's honestly refreshing to hear, because when prepping for this interview, a lot of the headlines were very much doom and gloom. So what you're saying is people are going to have to eventually make these big life decisions. It just is going to take some time.
I think there certainly is a lot of pent up demand to make a move. People do want to make these changes, and we think about this effect of the mortgage lock-in effect, where people don't want to give up these precious low mortgage rates that they scored earlier in the pandemic. It's not like there will be like a flood unleashed all of a sudden, right, of people making these moves all at the same time. But little by little, you see people kind of being dislodged and deciding to go ahead and take the plunge.
All right. So speaking of the Fed, I found an interesting article in Fortune by Eleanor Pringle, and the headline reads, "Jerome Powell has accidentally jammed the property market, especially for the ultra-rich."
I'm really curious to hear the quote, actually. I'd love to learn more.
The quote I pulled is, "National market data confirms that turnover in the first 8 months of the year hit the lowest level in the last 30 years."
Yeah, so that is definitely something that came up I did a story recently that was basically back in 2023. I pointed out that this was kind of like this housing ice age, where we saw all of this movement happening earlier in the pandemic, and then it really ground to a halt with higher mortgage rates. And so I think it just gets back to that lock-in effect. And when you see homes trading hands in the first 8 months of this year, the lowest level in at least 30 years, I think it really points to some of the affordability challenges in this that we're facing right now. It's like people have seen mortgage rates go up, and they've seen, the monthly payments really increase significantly. At the same time, I think a lot of people have been if you're on the buyer's side, kind of crossing your fingers and waiting for home prices to come down, thinking, okay, at least at some point, something's got to give. But we are in this period where, there were a lot of homes built, especially in the Sun Belt, that lower half of the US. So you do see some softness in housing markets there. But for the most part, we're still kind of working our way through this severe housing shortage that we got in with the underbuilding after the Great Recession, with the arrival of the millennial generation. And so you haven't seen home prices fall the way that I think some people on the buying side would have hoped. And so that, contributes to this feeling of, oh my gosh, how am I going to afford a home? I feel stuck because of these high rates. I think you're definitely seeing
Right. So do you think, this is just my conclusion based on our conversations earlier and the headline, that maybe this headline saying that Jerome Powell has accidentally jammed the property market, especially for the ultra rich, it's talking about how people bought homes in the luxury market around the pandemic time when mortgage rates were low, now all of a sudden have such good mortgage rates on such expensive homes that it's really hard to justify a move?
Yeah, I think that's exactly the case. And, while I've written about the housing ice age thawing a little bit with mortgage rates kind of coming down from that high of nearly 8% that we saw last October, I think, it'll take some time for people to kind of wrap their heads around that difference, and trying to decide, if everybody knew what the bottom is, you'd probably see a lot more, refinancing or moves and things like that. And it's really hard to pinpoint, where mortgage rates are going to go. And so I think that leaves people, I think that contributes to this feeling of, maybe being a little bit stuck.
Similar but different, I wanted to get your opinion on this headline that I read at Inman by Matt Carter. So it says, mortgage rates bounce to July levels on inflation worries. And one of the main quotes here says, upside risks to inflation have diminished, but they have not vanished. What's your first reaction when you hear that?
Yeah, I think with some of the rate cuts that we saw, right, the signal that the Federal Reserve is saying is basically, we feel like we've done a good job on inflation, and now we're going to turn our attention to the job market, making sure that the job market is stable. And I think there's still just a hesitancy out there. There's been so much kind of recession talk and recession fears, and are we going to get this soft landing? Are we not? How are we going to solve some of this inflation issue? I think it's basically, saying inflation seems to be in a better spot. They're still going to be looking at this data and still kind of trying to figure out that right balance to achieve that soft landing, and that will certainly have an impact on where mortgage rates go in the future. So I think it's all about just like continuing to watch that data and seeing what it shows.
Have you seen any immediate trends or trends that have built or go toward this idea that you have and this perception of what the future looks like? What are some of those trends that you're watching?
What I'm going to be really interested in is obviously keeping track of mortgage rates, right? When you think about the pool of homes, I think what really matters to people is when they look out at the housing market, how many choices do they have? How quickly do they have to act? And are they going to be getting into these bidding wars? So you really look at the active inventory, just the number of homes on the market. And then you also look at how many new homes on the market, how many new listings are hitting the market, and pay close attention to that data. And, we've seen encouraging signs that things are loosening up, right? That there is more inventory, that people are, listing their homes more. And it's also, I think it was a weaker summer selling season than a lot of people expected. Not in everywhere in the country, but kind of generally, we did see some inventory build up over the summer. So we're seeing adding to that. And so when you put those things together, of mortgage rates lower than where they were a year ago, more choices out there for home buyers, I think that does start to kind of give buyers a little bit more confidence. I think the affordability issues are still there, of course. What I'm anticipating, and what I did this story last month that was really, or earlier this month, that was talking to a lot of housing experts and economists about, I know it's hard to have this crystal ball, but what could next spring look like? And kind of what I arrived at is this modest improvement from this year. It's not going to be like this, oh my gosh, the housing market is so hot again. At least that's what the trends are showing right now. But it is an improvement in terms of just seeing people being able to move more. So that's what I'm going to be looking out for.
Yeah, thanks for weighing in on that.
I think the theme so far of these headlines and your takes on them have been slow but steady improvement, which is good.
Yeah, it's encouraging to see, and we definitely still have a long way to go, of course. And I think when you do see like an uptick in mortgage rates like we saw recently, I think that does kind of shock buyers a little bit and sellers as well, and just trying to kind of figuring out what that means. But I think you have to look at a little bit more of a long-term approach in 6 months and where are things headed. And so that's kind of the approach that I've been trying to take.
Right. I think that's honestly like a healthier approach to take when looking at the housing market. Instead of looking for like immediate, fast reactions to things, maybe looking at things from a broader scope.
Yeah, I agree, and especially, and like I said, there are people that have to make all kinds of moves that just have nothing to do with this monthly or weekly data, and so I try to keep that perspective as well. The people have to make all kinds of life decisions.
All right, so I figured we would talk a little bit about major market shifts. I'm going to read you a headline, and then we can talk about Austin, a city where we all went to college in. We have 3 Longhorns on this call. All right, so the headline is Housing Market Shift, 6 Major Markets Where Home Prices Are Falling, written by Lance Lambert in Fast Company. And a quote that I pulled is Austin, once a pandemic-fueled housing hotspot, is now seeing one of the sharpest declines in home prices as supply outpaces demand.
Yeah, I think Austin is one of the most fascinating markets in the country right now. I think it has been. And I actually recently did a deep dive on what exactly is going on in Austin, right? Because as you mentioned in that quote, it was one of this pandemic era boom towns, and now you are seeing price decreases and asking rent decreases. And you even go just, you look around at home listings and you do see price cuts. The interesting thing that I took away from talking to real estate agents and economists and people that were based in Austin is that long term, the expectation is that Austin will be fine in terms of the long term demand for housing in the area, the jobs that are going to be available, the people that do still want to live in the city. And you look at the falling home prices and you think, okay, maybe Austin is doom and gloom. I think whenever you see home prices now, people automatically think back to the Great Recession and they wonder about a crash. And I think what's important to consider here is that a lot of people were describing Austin to me as a success story almost, in terms of when you look at the greater metro, just seeing this huge influx of building. And it's really, the cities in the Sun Belt, that lower half of the US, are generally better at getting housing built quickly in response to demand. So you saw all this demand for Austin, and then you saw home builders basically answer the call and build tens of thousands of homes over the past few years. And that really helps bring prices in check. And so you do see that pendulum swing in the other direction to, okay, there's now this moment in time where there is an imbalance between supply and demand, right? But that's not something that I think will continue into the long run. I think it's, right now, I think real estate is cyclical in this way that, the pendulum swings really far in one direction and it swings really far in the other direction. And people are trying to kind of find the balance in between. But you do see, I think it's encouraging actually to see all the inventory be built in the Austin metro. And I think Austin certainly has a long way to go in terms of maintaining affordability. But when you compare it to a city like San Francisco that didn't build nearly as many homes over that same time period and has seen prices and rents continue to rise, I think Austin kind of stands alone as this city where they actually were able to get real prices in a little bit with more inventory.
Yeah, I mean, I think about when I first came to Austin for school, the skyline looked so much different than it does now. It's crazy to look back at photos.
Yeah, exactly. I mean, growing up in Austin, it's incredible to see the way that it's changed. And I think especially during the pandemic, seeing the way that home prices were rising, I wondered if it would become kind of this next San Francisco, this poster child of unaffordability and, people having to move. And don't get me wrong, home prices are still up a lot. The median cost of a home in the Austin metro, I mean, between 2010 and 2020 grew about 63%. We saw it grow, at another 56% just a couple of years, surpassing, 500,000 by the start of 2023. So home prices are still up a lot. I think anybody that owned a home prior to the pandemic is still much richer than they were even after some of these kind of price decreases that we've seen. It is kind of it's that modest decrease, but home prices are still up, much more than they were when you compare it to the start of the pandemic. And I think it's really just this kind of temporary imbalance. And I think there are kind of two ways to look at it, right? Like you could look at it at one lens and it's like all of these FOMO filled buyers, they bid up home prices. And then of course they were going to come down a little bit from there. But you also look at it in this way in which real estate developers, they answered the call and built tens of thousands of new homes. And I think that is the interesting point here, is that this construction boom, you did see a little bit of demand pullback with spiking mortgage rates. And, when you see supply and demand move that way, it's basically going to result in a little bit lower prices, but not a crash like I've seen some people predict or, warn about. I think it's a really interesting city right now.
And just for the listeners who are wondering other markets talked about in this article, because the headline is 6 major markets where home prices are falling. We have New Orleans, Louisiana with a 4% decrease, Austin, Texas with a 4% decrease, San Antonio with a 2.7% decrease, Tampa, Florida with 0.5 point decrease, Jacksonville, Florida with 0.3% decrease, and Dallas, Texas with 0.3% decrease. Do you think having 3 Texas cities in those top 6 markets of price decreases says anything about the state or just about the housing market in Texas?
I think it says something about just the story alludes to increased inventory and cooling buyer interest. And I think that inventory piece is really important. It's, in Texas, builders can come in and build a lot really quickly. And it's not like they're seeing data one month and then coming in and completing a home the next month. They're working on this lag of a year, a couple of years, 3 years. And so, they're responding to these signals that they got earlier in the pandemic when there was really this crush of demand and you had a lot of builders following suit. And so now you're seeing the results of that, where all of these homes are hitting the market, and there may be more homes hitting the market right now than what demand would call for at this particular moment, with the affordability challenges, with rates higher than I think some people might have expected at this time. And so that's why you're seeing kind of this temporary softness. And you also have to think of the way that prices grew so rapidly in these cities as well. So it's, small drop here, but it's after this extreme, crazy rise that we saw during the pandemic.
Right, which brings it back to your point that the housing market is cyclical and the answer is somewhere in the middle versus one extreme or the other.
Yeah, especially because it's a good that you can't roll it off the factory line as soon as people demand it. You do have to kind of build on this lag here, unfortunately, which, makes it tough for builders. But, I think we're seeing some of that right now.
All right. So looking forward, we have a CoreLogic Case-Shiller Home Price Index that is going to be published Tuesday, October 29th. Several trends here are expected to be key in this report. Do you have any thoughts looking at this report drop?
Yeah, I mean, I'll always be looking at, what does it say in terms of, are we continuing to see home price growth slowing? That's kind of what we've seen in the past. Recently, kind of a modest growth. I don't think there will be necessarily a lot of surprises here, but I mean, who knows? I think I am still mostly interested in, again, who's listing their homes. What is the inventory picture tell us, especially as we kind of wind down on the selling season for 2024 and start to look ahead to 2025. Obviously people are thinking a lot about affordability, and, buyers will probably be cheering for kind of that muted growth that we've seen recently. But I will still be really paying attention to where mortgage rates headed and what is the inventory story telling us here.
And real quick, just for listeners who might not know, can you explain in really simple terms what the CoreLogic Case-Shiller Home Price Index is?
Yeah, so honestly, it's really just a measure of how home prices are changing, month to month, year over year. And so it's really one of those reports that people look at really closely to tell us kind of where, for single family home prices, where they're headed, and really just comparing those changes from month to month and year to year. It's one of those reports that a lot of people really look at within the industry.
I want to switch topics a little bit and talk about some of the articles that you have written, James. I know you do a lot on generational trends articles, but also a variety of different things. What's an article or two that stand out to you that will stand the test of time?
I think really when I think about writing back in last spring about this housing ice age, I really think that is and this mortgage rate lock-in effect. I really think that is going to be a defining story, not just for the next year or two, but for years to come as people kind of slowly shake loose from this lock-in effect. But when you think about the 30-year mortgage, in a lot of ways, it's a gift, right? Because you can lock in your home price, your home payments for years to come. It's this incredible gift for American homeowners in terms of being able to predict their finances and locking in these rates. But it can also be a trap in a sense where if you get such a low rate, it kind of changes the moves that you want to make for years to come. And when you see mortgage rates where they're at today, it's hard to kind of reconcile that with where they were just a couple of years ago, 2 or 3 years ago. So I think that will be something that we'll be talking about for a while. And so pinpointing that, I think last year and talking about the effects that we'll continue to see for years to come. I think that's just comes from talking to a lot of economists who are really living in the data here and know what they're talking about, and talking to real estate agents who are seeing it on the ground as well in terms of slower sales and fewer buyers hitting the market. So that's one that I think about a lot kind of moving forward.
Great. And I think that ties in beautifully with all the themes of the articles we've been reading today. So definitely is standing the test of time. Well, thank you, James, for reading the news with us. Where can our listeners find your pieces and keep up with everything you're writing about?
Yeah, businessinsider.com. James Rodriguez, if you search my byline, you look on our real estate. We have a lot of great real estate coverage, not just from me, but we have a whole team of real estate writers who are covering across the country what's going on in different cities and what's going on with mortgage rates and personal finance, and of course, all the other tech and business news that we cover. So definitely recommend Business Insider.
Thank you so much for coming on. We appreciate it.
Thanks, James.
Thanks so much. This was fun.